What if I told you that one of the most talked about fintech stocks in America just dropped a jaw-dropping 33% this year, and yet the company behind it is quietly shattering every record in its own history? If you pulled up a chart of SoFi Technologies today, July 4th, 2026, you'd probably assume this company was in serious trouble. The stock has bled out over 30% year to date, and thousands of investors are staring at their screens, asking the same painful question. Is the SoFi dream finally dead? Is this 33% crash a flashing red warning sign to run for the exits? Or is it the single biggest discount opportunity Wall Street has handed us all year? Here's the contradiction that almost nobody is talking about. While the share price keeps sliding, the actual business underneath it is exploding. We are witnessing one of the widest gaps I have ever seen between a so-called volatile stock and a consistently profitable financial platform that is maturing into an absolute powerhouse right before our eyes. And by the end of this video, you'll understand exactly why the smartest money in the market is buying hand over fist while everyone else panics. Now, before we dive into the numbers that will completely change how you see this stock, do me one quick favor. If you get any value out of this breakdown, smash that like button and hit subscribe. It genuinely helps the channel grow and keeps this kind of deep analysis coming your way. All right, let's get into it. So let's talk about where SoFi actually sits right now. The stock is trading at $18.24. For most retail traders, watching a 33% decline unfold over just 6 months is a signal to hit the panic button and get out. But for the analysts who actually dig into the data, this doesn't look like a collapse at all. It looks like a massive, glaring mispricing of the company's long-term growth engine. The market is obsessing over short-term noise and volatility, but the fundamental reality tells a completely different story. SoFi has successfully transformed from a scrappy high-growth disruptor into a diversified, consistently profitable machine. So the real question we have to answer is this: why on earth is the market getting the value of this business so wrong? The answer comes down to one stubborn misconception that has haunted this stock since the day it went public. The bear case is dead simple. They say SoFi is just a lender. And if you truly believe that, then sure, SoFi is nothing more than a capital-heavy bank, chained down by balance sheet constraints and rattled by every tiny twitch in interest rates. But that entire perception is becoming dangerously outdated. Because the reality is that SoFi is evolving into something completely different, a capital-light software platform. They are deepening member engagement through tools that add zero balance sheet risk, things like AI-driven financial assistance and on-chain settlement infrastructure. This isn't just a bank anymore. It's a technology ecosystem that happens to hold a bank charter. And here's the wild part. Over just the last few weeks, they've launched 3 major initiatives that prove this software-first thesis is completely real. Let me show you what I mean, because in late June, SoFi made a series of power moves that should have everyone paying attention. First, they launched Composer by SoFi, an AI-powered platform that lets you automate entire trading strategies using nothing but natural language. Then came SoFi Coach, an AI financial assistant built right into the app. But here's the real kicker. The move that separates them from every legacy bank out there. They minted SoFi SD, the very first US dollar-backed stablecoin issued by a national bank on a public blockchain, and it yields 4.2%. Think about what that means. This positions SoFi as a genuine leader in digital asset infrastructure, a business that generates fees without taking on any credit risk whatsoever. And even their expansion into small business loans on June 30th is engineered to tap into their absolutely massive 14.7 million member base. That's the vision. But now let's talk about the cold, hard cash. Because visions are cheap without profits to back them up. And this is where SoFi's story goes from interesting to jaw-dropping. Their first quarter 2026 results didn't just meet expectations, they obliterated them. The company reported record adjusted net revenue of $1.1 billion. That is a stunning 41% increase year over year. But it gets even better. They delivered GAAP net income of $167 million. This is the flywheel effect in full motion. As they add more members, up 35% to nearly 15 million, and pile on more products, their costs simply do not rise at the same rate. That, right there, is called operating leverage. And it is the unmistakable hallmark of a technology company, not a boring traditional bank. But before you get too bullish and rush to buy, there's another layer to this financial story you absolutely need to hear. Because management isn't just sitting back and resting on one great quarter. They actually turned around and raised their full year 2026 guidance. They now expect GAAP net income to reach approximately $370 million, up from their previous estimate of $320 million. They also bumped up their GAAP earnings per share guidance to 31 cents. Now, why does this matter so much? Because this upgrade sends a massive signal to the entire market that the profitability we're witnessing isn't some lucky one-time anomaly. It is structural, it is durable, and it is accelerating. So here's the natural question that follows. If the numbers are genuinely this incredible, then who is actually out there buying this stock while the price keeps falling? Well, this is where it gets fascinating. If you trace the timeline of just the last 2 weeks, you'll see the smart money is moving fast and moving quietly. On June 30th, the very same day, SoFi launched small business lending. Cathie Wood's ARK Innovation ETF stepped in and scooped up over 200,000 shares. And this came right after the big AI product launch on the 23rd. Do you see the pattern forming here? As SoFi executes flawlessly on its technology roadmap, high-profile institutional capital is sitting there waiting to gobble up every available share. But here's the thing. There is one person who knows this company better than Cathie Wood ever could, and his conviction is on a completely different level. I'm talking about the CEO himself, Anthony Noto. This man has been on what I can only describe as a relentless buying spree. In 2026 alone, he has made 5 separate open market purchases, totaling over 130,000 shares at an average price of around $17.29. He now holds nearly 12 million shares directly. Let that sink in for a second. When a chief executive puts that much of his own personal wealth on the line while the stock is down 30%, it tells you everything you need to know about what he really thinks of this valuation. Actions like that scream conviction. And here's the best part. He is very far from alone in that belief. Because institutions now hold over 56% of SoFi's shares. And we're not talking about small-time players here. We're talking about the absolute heavy hitters. BlackRock holds nearly 70 million shares, worth over $1.2 billion, followed closely by Vanguard. This kind of heavy institutional presence creates a rock-solid foundational base underneath the stock. It dramatically reduces the wild, retail-driven volatility we saw in years past, and it strongly suggests that the big money is settling in for the long haul. So if the insiders are aggressively buying and the institutions are locking in their positions, then where exactly does that leave the stock price heading from here? Let's talk about what Wall Street actually expects. Now, the analysts are currently a bit conflicted, but here's the beautiful part. Even the cautious hold consensus still points to real upside. The average price target sits at $20.90. But the high conviction bulls, like the analysts over at Citigroup, are calling for $30 flat. That represents over 60% upside from where we sit today. And if you zoom out even further, independent models are projecting SoFi hitting anywhere from $33 to $48 by 2028 or 2030, assuming the company simply maintains a 25% revenue growth rate. Do the math on that, and you're looking at a potential 171% total return. But here's the thing. We don't even have to wait years for a serious move, because the technical setup for next week alone is shaping up like an absolute powder keg. Let me break down the technicals for you. Right now, SoFi is sitting in what I'd call a constructive base building phase. It is currently trading above both its 20-day and 50-day moving averages, which is a genuinely healthy sign for the near term. We have a very clear support floor established between $16, $50, and $17, a zone where buyers have historically stepped in to defend the price every single time. On the flip side, we are now bumping right up against a resistance ceiling sitting between $18, $50, and $19. And this is precisely where things get incredibly interesting, because there is a massive downward force in this stock that is about to get completely trapped. Here's what I mean. Short interest in SoFi is currently sitting at 15.5% of the float. That works out to nearly 196 million shares that have been sold short. Now, at the very same time, the options chain for the July 10th expiry is showing massive open interest stacked up in the $19 and $20 calls. So think about the setup here. If SoFi catches any kind of positive volume that pushes it past that $18.50 resistance level, all of those short sellers will be forced to cover their positions at the exact same moment. The market makers are scrambling to hedge those call options. Can you imagine what happens then? This is a textbook recipe for a rapid, explosive, short covering rally. So what does all of this actually mean for the next few days of trading? For next week, we are watching two clear pathways unfold. The bull pathway targets $19.20 to $19.50, and it gets triggered the moment we break above $18.50 on strong volume. But if that momentum happens to fizzle out, the bear pathway simply sees a healthy retest of the 100-day moving average down at $17.50. And given all the options activity we just talked about, the bias right now is clearly tilted toward the upside. So the big question becomes, how do you actually play this thing? Whether you're a fast-moving trader or a patient long-term investor. Let me hand you the strategic playbook. For the long-term investor, the strategy is beautifully simple. Accumulate at current levels or scale in on any dips towards $17.50. Your target is $30 plus for a multi-year hold. For the short-term swing trader, you'll want to look for an entry between $17.80 and $18.10. Set your take profit target between $19.10 and $19.50 to ride that squeeze momentum, but always, and I mean always, keep a strict stop loss below $16.80 to protect your hard-earned capital. And that brings us right up to the one question every single investor watching this actually cares about. Is it finally time to buy? Here's my honest take on it. The market is stubbornly valuing SoFi as a traditional, capital-heavy lender. But SoFi is out there executing with the operating leverage of a high-margin software platform. Between the powerful bank charter advantage, the everything app ecosystem, and the relentless insider buying, the risk-reward profile here is incredibly tilted in favor of the bulls. At $18.24, you aren't just buying a bank. You could be buying the future of finance at a 33% discount. Now, before we wrap everything up, I need to share something important with you. Everything I've discussed in this video is strictly for informational and educational purposes only. I am not a licensed financial advisor, and none of this should be taken as personalized financial or investment advice. The stock market carries real risk, and you can absolutely lose money. So please, always do your own thorough research and consider speaking with a qualified financial professional before making any investment decisions with your own money. With all of that said, I'd genuinely love to hear from you down in the comments. Here's my question. If SoFi truly is the future of finance trading at a discount right now, what do you think is the one thing that could actually derail this bull thesis? Or are you convinced this crash is the buying opportunity of the year? Drop your honest thoughts below. I read every single comment. And if this deep dive gave you a fresh perspective on SoFi, please do me a favor and smash that like button, hit subscribe, and ring the notification bell so you never miss the next breakdown. Thanks so much for watching, and I'll see you in the next one.